Hi, I'm Todd Rosenbluth, Head of Research at VettaFi, and thanks for joining us for another episode of ETF360. I'm joined by Matt Kaufman of Calamos Investments, and we're going to talk about convertible investing. Matt, thanks for joining me.
Thanks, Todd. Thanks for having me.
Well, it's my pleasure. So let's talk about convertibles. We've seen a bit of a pickup in both interest and performance in 2023, right? What's going on?
Yeah, absolutely. Some might even call it a renaissance. For those who aren't up to speed on convertibles, just a brief overview. Convertibles are essentially corporate bonds, but with an added option to convert that bond into a set number of shares of the company's common stock at a certain price point in the future. So essentially a corporate bond with a call option bolted on. A lot of advisors find convertibles attractive because they offer investors upside growth potential along with the risk management and income potential of a traditional bond. So that's convertible bonds on the surface, but at this point in the cycle, with rates having risen more than 500 basis points and potentially being here high for a while, we're seeing convertible bonds start to come into favor. Rising rates have increased borrowing costs for everybody, and that includes companies looking to raise capital or refinance debt. And so we've seen this really generate renewed appetite for convertible bonds.
So Calamos takes an active approach historically. What are the benefits of an active approach in this environment?
Yeah, thank you. For those who are new to Calamos, active management, it's in our DNA, specifically as it relates to convertibles and liquid alternative strategies. We were founded in 1977 by our current chairman, John Calamos Sr. He established the firm through the launch of one of the first convertible bond funds in the U.S. Today, Calamos is the largest convertible manager in the United States and one of the top alternatives managers as well. So we made a strategic move to bring our expertise to the active ETF space this year, largely after the SEC rule change in 2019 really opened the door for the tax-efficient delivery of active investment strategies in the ETF wrapper. So if you look at ETF flows today, more than 30% of the flows are coming through the active ETF structure, but only 6% of the total assets in the ETF space are slated to active ETFs. And so at Calamos, we see a tremendous opportunity and a potential sea change in assets into active ETFs over the next decade or so. And it's a space we think we're really well positioned to capture. But, I don't think it's going to be in the same traditional sense that a lot of folks may think of. A lot of those active ETF flows are going into products that employ a rules-based foundation with an active edge. And that's squarely how we've built our latest ETF, CVRT.
So let's talk about the ETF itself. Tell me more about CVRT.
Yeah, CVRT is the ticker symbol for the Calamos Convertible Equity Alternative ETF, CVRT. And so it's against this backdrop of elevated rates that may be here for a while. And given our heritage in the convertible space, we thought it was fitting to bring Calamos Convertible Equity Alternative ETF to market. If you look at a traditional issuer of corporate bonds over the last 15 years, companies could raise debt at very favorable financing costs. That has since changed. 2 years ago, a double B company could go to the corporate bond market, maybe pay 3.5-4% to raise capital. Today, that cost has nearly doubled. And so we're seeing, this increase in a pool of liquidity that can be added to the convertible bond space. And what we saw as rates were rising is we saw a lot of companies, wait to see if rates would ever come down. And so as they've stayed higher for longer, it's really built up this maturity wall where we're seeing almost $4 trillion that need to be refinanced and moved through the capital debt markets. So we really think that's going to create this renaissance as we've been talking about in convertible bonds. So it's against that backdrop that we're bringing CVRT. Specifically, CVRT is looking at the equity-sensitive convertible bond segment. So those convertibles that are looking a lot more like their stock counterpart than their bond counterpart. And so just to dive into that briefly, because convertibles are a hybrid instrument, at times they can look more like a bond, at other times they can look more like their stock component. And so if you look at the broad passive convertibles markets today, they look very fixed income heavy. Many convertibles are trading like bonds because that conversion premium is really far out of the money. So we built the ETF that we thought was missing in the convertible space and in the ETF space today, an equity-sensitive convertible ETF.
Thanks, Matt. So let's think about, how does this ETF fit into a broader advisor portfolio?
Sure. This type of equity-sensitive convertible approach really uses the convertibles market for growth. And so historically, what this has meant, this segment of the market has delivered a really great risk-reward profile relative to small and mid-cap growth stocks and relative to the S&P 500 equal weight index. And then for existing convertible investors, it really allows you to take a step up in growth right now with your existing convertibles exposure.
Well, thanks a lot. I learned a lot. I know the audience did too. Thanks a lot, Matt.
Thanks, Todd.
We'll see you next time on ETF 360.